Holy smokes everyone, in this video we're going to be going over one of the most scariest but most important predictions Michael Burry has made that is literally becoming true right before our eyes right now, but is about to get a lot worse. Michael Burry has made a lot of predictions, and more often than not, they normally become true. They might not become true straight away, but in the end, he's normally right. So when he speaks, we must listen. In this video, we're going to go over Michael Burry's warning that he says the current US government and the Federal Reserve is going to lead us down to the path of 1920s Germany hyperinflation if they don't act now, if they don't stop printing money, if they don't start lifting interest rates to get inflation under control. America is going to see complete hyperinflation. This is not a drill, people. We're going to break down all the facts and information in this video right now. And you know what's really interesting and what really gives his words a lot of weight is the Security and Exchange Commission completely shut him down. And it's funny they shut down Michael Burry for trying to warn people about the pain that's going to come and all the big issues, because he reveals the truth and they hate people telling the truth. They shut him down, but they let these, 12-year-olds on TikTok say, Dogecoin's going to $100, or they let these other, financial gurus saying, gold's going to go to $100,000. That's all good. Or they say, if you can pump stocks up, like Tesla saying Tesla's going to, $5,000, that's fine. But you mention the financial system's going to go down or the dollar's going to go down, that just crosses the line. So looky here everyone, big short investor Michael Burry says prepare for inflation and warns Bitcoin and gold might be at risk and might not be able to be a good enough hedge against inflation. And you know what? We're already starting to see inflation. CPI came in at 4.2% annualized. It looks like it's going to get worse. PPI, the producer price index, came in at 6.2%. So he's right there. And he's also right on Bitcoin. And also we did see a drop in the gold price. We'll hit the charts. So we also mentioned in February that gold will go down, and that came true as well. But we are seeing a good rebound here, and gold is up around 12%. So that may be a sign that all these hedge funds are getting out of Bitcoin and turning to gold, because do they see hard times coming ahead? So listen to this. He says, prepare for inflation. The investor said in a now deleted tweet on Thursday night. Reopening and stimulus on the way. Pre-pandemic, it took $3 to $4 of debt to create $1 of GDP, and it's now much worse. In an inflationary crisis, governments will move to squash competitors in the currency arena like Bitcoin and gold. And what are we seeing now? There's been a bombardment of Bitcoin because Bitcoin was sucking trillions of dollars into it. The cryptocurrency market cap hit around $2.5 trillion. So it wasn't a joke. It was taking a lot of money out of Wall Street and a lot of money out of the US dollar. And so his prediction here is coming true with Bitcoin as well. But you know what would be really scary? What they've actually done in the past is they actually done a gold confiscation. And if the dollar really starts to die, I hope that doesn't happen again in 2022 or 2023. And something very interesting he said, he quoted at length from Dying of Money Lessons of the Great German and American Inflations, a book by Genzo Patterson to drive his message home. So what could be happening right now is we could have, maybe 2, 3, maybe even 8 years like what happened in Germany of high inflation, and the Fed will be like, it's just temporary, it's nothing to worry about, we got it contained. And all it could take is that one last year where people lose complete faith in the currency, they lose complete faith in the financial system for it to become crashing down very quickly. So that's why you have to prepare now. Too many people leave it to too late to start preparing. They say, I don't think it's going to happen, I think he's wrong. And then it happens, and by the time it happens, it's too late. So just like buying insurance for a car or buying insurance for a house, you want to get insurance for hyperinflation, which we'll get into later. So it says here, Burry highlighted passages from the book about the recurrence of inflation throughout history, how it's usually preceded by an economic boom and a spike in overnight fortunes, like what's happening right now, and how it leads to soaring crime, surging living costs, and poverty. People, what are we seeing? We're seeing the Dogecoin millionaires. We're seeing the cryptocurrency millionaires. This is all signs we're at the peak, and this is all signs that we could lead to hyperinflation. And this is quite worrying. Listen to this. The investor compared Germany's path to hyperinflation in the 1920s to the America's current trajectory. So it pretty much says here that what Germany did and what the US is now doing is they're covering up their deficits with higher taxes, they're printing more paper dollars, and they're issuing more treasuries. History is not useless, he said in another tweet. This text explores the 1970s American inflation, which is more relevant today than one might think. And people, he was saying this in February before this high inflation came out. As we can see here, in January, the CPI came in at 0.3%, then in February 0.4%, then in March 0.6%, then in April 0.8%. Can you see the trend and trajectory we're on here, people? This is not a joke, and all eyes will be on the latest CPI numbers that will be released next month for May. If this comes in higher, we definitely need to worry. And another huge thing that we have to learn from history, what happened in Germany in the 20s and what happened during the roaring 20s before the Great Depression is happening right now. Listen to this. Burry also drew parallels between the market mania in Germany before inflation took off and Reddit fueled buying of meme stocks this year that led Robinhood to temporarily halt purchases of certain stocks. And then we also saw this happen during the cryptocurrency bloodbath when Bitcoin fell 30% the other day. All the cryptocurrency exchanges shut down and wouldn't let people buy or sell. Before the Germany hyperinflation in the 1920s, everyone from the elevator operator up was playing the market, and volumes became such that the financial industry could not keep up with the paperwork, and the boards was obliged to close. Does this sound familiar, people? This is literally happening today with all these exchanges. Burry's latest comments echoed his warnings of a massive market bubble, and we're starting to see leaks or pops in the bubble now. The stocks are slowly starting to trend down, and especially the high growth tech stocks. He was completely right with his call on Tesla. He started putting puts and shorts on Tesla around $800, and now it's all the way down to $580. So again, he was right with that call as well. And he also spoke on the GameStop frenzy as unnatural, insane, and dangerous. And since then, we've now had the Dogecoin crazy mania. And people, this is all signs of the top. When you see these parabolic moves, that's not healthy, that's not good, that's not a good time to invest. Again, you want to be greedy when others are fearful and be fearful when others are greedy. And there's still a fair bit of greed in the markets right now. And people, like I keep showing, look at the M2 money supply. It's gone completely parabolic in 2020 and it's still increasing at a rapid pace. It's now $20 trillion, 360 billion. And look at the US dollar purchasing power. And look here, once we got off the gold standard in 1970, it's completely collapsed. And now it's going down to pretty much nothing. The dollar index has gone from 1,000 to now just 37 since the 1920s. But like he warns of hyperinflation, it's happening right before our eyes. Look at this chart for the consumer price index for all urban consumers and all items in US city average. We can see here, it's just gone completely parabolic as well. But people aren't really aware of what's going on. So I urge you, please share this with your family. Please share this with your friends so they can know exactly what's going on. Because unfortunately, the average American doesn't know how screwed they're getting right now. And another sign of hyperinflation and shows more price hikes are coming. Look at commodities like I keep talking about. Ethanol up nearly 64%. Gasoline up 47% year to date. Everyone knows about lumber up 66% year to date. But other commodities, canola 40%, corn 35%. I think I'm not going to be able to afford corn soon anymore with my veggies. Milk is up nearly 20%, 19.9%, and milk is an essential item for most families. For all you coffee drinkers, coffee's up 17%, so your cup of coffee is definitely going to get more expensive. And people, this is really devastating. The cost of meat is going up absolutely crazy, and people aren't going to be able to afford to buy meat very soon. Lean hogs is up 62.5%, and poultry is up 18.4%. And something I'm pretty bullish on, and a good way to hedge against inflation, and especially with the big push for green infrastructure and green renewable energy, is industrial metals. Look at the prices of industrial metals. Lithium up 91%. Everyone's talking about copper, but look at these other metals. Rhodium 64%, tin 45%, cobalt 34%, iron ore, they are up much more than copper. Copper's just only up 27% compared to these other metals. And people, what you have to know is the way they record the data and record inflation, they keep on manipulating it to make it seem not as bad as it is. That's why they say, look, we can do all this money printing and won't see inflation. But look at this, look at Shadow Stats. Shadow Stats has inflation at 8%. double what the CPI is. And that's something I think which is definitely more realistic, and that's something I think most people in the comment section and most US consumers would agree 8% sounds a lot more realistic. And let's look at this, everyone. This is very interesting, and this is how to hedge against inflation and what we should be doing to prepare for inflation. Michael Burry turns to Warren Buffett to underscore the dangers of inflation. So Burry shared several screenshots from Buffett's 1980 letter to Berkshire Hathaway shareholders. In the letter, Buffett explained the high rates of inflation act as a tax on capital, discouraging companies from investing by reducing their real returns. And that's right. Say, for example, if you're in the stock market and you're getting a 5% return, but inflation is 10%, well, really, for inflation-adjusted returns, you're actually getting a negative return of 5%. And that's why high inflation is so dangerous, because even if you think stocks may perform good during hyperinflation, stock returns may not outperform the pace of inflation. Listen to this, this is a good analogy here. The average tax paying investor is now running up a down escalator whose pace has been accelerated to the point where his upward progress is nil. So that's right, you're on the escalator, you're trying to invest, you're trying to get these returns, you're getting 5, 10%, but then if inflation's 15, 20%, you're going nowhere and you're actually going backwards. And Burry dredged up the letter to emphasize that inflation ramps up, corporate profits today will be far more valuable than profits in the future. So for every dollar companies earning now will buy them much more goods and services than their dollars and their earnings in the future. And people, you know what I'm most worried about? I'm most worried that the Federal Reserve isn't going to act. They're not going to do anything because they don't want the stock market to crash. They don't want the financial system to collapse. And they may be worried that the US won't be able to afford their debt if they lift interest rates 2 to 3% to combat inflation. So we have to keep the Fed honest, and we have to make sure they do act on inflation, because if they get their way, they might just let it run hot. Okay, so now that you know huge inflation is going to come, what can we do to protect ourselves? Well, what I'm doing now is, this is something a little out of the box thinking here. If you're going to be buying food and you can buy food that lasts a long time like rice, etc., because I just brought rice and it's up 33% from last year, you may want to start storing food that's durable. A lot of durable foods are actually skyrocketing in value that last for a long time. But as an investor, traditionally, precious metals would act as a hedge against inflation. But if the Federal Reserve does act and does lift interest rates and the dollar strengthens, this would go down. So what I'm doing, this is not financial advice, this is what I'm doing is I'm investing in precious metals commodities as a hedge against inflation, but I also do have a bit of cash on the side, because if interest rates do go up, then the dollar will strengthen, so then you'll make a return there, and then you may finally start getting some interest on those dollars. And if interest rates do go up, stocks will go down, precious metals will go down, and then you can come in and swoop in and buy up everything for pennies on the dollar when there's blood in the streets. For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date on the latest happening in the economy with inflation, the stock market, cryptocurrency market, and global finance news. I hope this video was informative for you. If you're bored, I'll put up some other videos here. I'll see you there.